So today we're going to be talking about why owning your book of business as a life insurance agent is extremely important. And take it from somebody that's been in the insurance space for the last 12 years, and I didn't know anything about owning your book of business, why it was important, and the benefits that come with it. So my hope is that through my experience of learning and the mistakes that I've made, that you make better decisions when it comes to which IMO or agency that you choose and the residuals that come with it and ensuring that you're doing your proper research. With that said, let's talk about why owning your book of business is important. First, let's talk about what is owning a book of business and what are residuals. Okay, so I don't know if you know this, it depends on how long you've been in the insurance space, but as an insurance agent in your first normally the way that you're paid is first year commissions. So essentially what happens is that you get signed on with an agency or an IMO, and they, based off the contract that you get with the insurance carrier, they may offer you a 100% contract, 60% contract, 70% contract. It all depends on who you're associated with, but they'll tell you how it works when it comes to you getting paid in your first year off of a policy that you write. As an example, you as an agent, you write a life insurance policy, and what normally happens is that you earn a one-time commission percentage. So, in the example over here to the right, let's say that you have a $3,000 target premium policy, which, just so I can go into a little bit of a deeper financial side for you, that is somebody paying $250 per month. That's $3,000 per year. If your contract is 100% and you're getting a 9-month advance, and normally the way that that works is that a 9-month advance is the insurance company out of that $3,000 policy case, they'll give you 9 months up front, which is a loan, but I'm not going to break that down in this video today. But assuming that you have a 9-month advance, the way that the mathematics work is that $3,000 policy multiplied by 75%, which is 9 months. It means that you'll get paid $2,250 up front. And then you'll get the remainder of your commissions on month 9 through 12 when the client's payments reach 9 months. Now, where do residuals come in? Essentially, what happens is that after the client's first full year of paying the life insurance company, if you have residuals built into your contract, and let's assume that you have a 3% residual, that means that every year that the client stays on and pays that $3,000, that 3% residual that you earn is $90 per year. So basically, every policy that you write from the year prior, if you're writing a $3,000 policy, you're earning $90 for every client the next year, the next year, the next year, and the next year. That's why residuals are so important. Think of it like your phone bill for a moment. Well, if I've been with the same company, T-Mobile, for the last 10 years, and I paid my policy one, they only needed to get me as a customer one time, but then I'm paying for the next 10 years. T-Mobile's making a lot of money. And now imagine now they have hundreds of thousands of customers who still continue to pay them 10 years later after acquiring that customer once. That's why residuals are extremely valuable. And that's the reason why you have a lot of insurance companies, IMOs, and agencies, why they recruit a lot of agents, and then they get those agents to write a lot of business. And when those agents quit, well, what happens is if that agent wrote a lot of policies but then quit, somebody's still getting paid from those customers, still continuing to pay their life insurance policies. Probably your upline or the IMO or agency is earning those residuals. So whether you quit or not, they still benefit. So you want to ensure that you have residuals built into your contract where if that at that 3%, you're still earning $90 per year. As an example, if you over the course of your lifetime of running your insurance business have 1,000 clients on the books at an average of $3,000 in premium per year, 3,000 in premium per year, that's 1,000 clients at $90. You're earning $90,000 per year just maintaining the book of business that you already have acquired over the course of years. That's why residuals are key. It's your way to be able to build your wealth in the background and ultimately be able to retire so that you're not continuing to write business 40 years from now, right? Like you don't want to write business 40 years from now. You want to be able to continue to compound off the work that you did 40 years prior. So now you have something valuable on your hands. That's why residuals are key. And that's why you don't want to give your residuals away. And you want to make sure that you work with companies that allow it. take it from somebody who made that mistake where that wasn't a really big part of my process when it comes to building my agency. It wasn't something I really cared about or wasn't broken down to me in this way. And I pray that you go into your insurance business making sure that you are demanding residuals on everything. Now, let's talk about why another reason why residuals are important. Number two, it now becomes a sellable asset for you. And I want to be able to go into a breakdown of like what this means. So let's say that you have an insurance business, right? And with that insurance business, you're writing two policies per day, 10 policies per week, 40 policies per month, which comes out to be 480 policies per year. Okay, let's assume that the same average premium that you write per policy is $3,000 per year because you're in the advanced market space. Now, of course, in order to write two policies a day, 10 policies a week, 40 policies a month, 480 policies a year, you're going to need a reliable lead source. And that is what my company basically does is that we build a lead engine into our life insurance clients' businesses so that they have the ability to do this. Now, assuming that you're writing 480 policies per year, let's also take into account that you have an average of a 30% chargeback rate on the life of your book of business, right? 30% of clients are falling off of the books. So put it this way, for every 480 clients that you write per year, only about 336 clients stick because you have an average chargeback rate of 30% over the course of the lifetime of you being in this business. So for every 480 clients, 336 clients actually stick on the books. You could do that math by just taking 480 minus 30%. Now, let's take the same exact example that I gave in number one, where you're earning a 3% residual on your book. Well, that means that 336 clients multiplied by $3,000 in annual premium, multiplied by the 3% residual, that means that every 336 clients is worth $30,240 per year that's coming into your business from what you did the last year. So every year that you stay in business, you're becoming $30,240 richer. Now, that's not taking into consideration the expenses that are going to be necessary for you to be able to maintain that 30,000. Like you might have administrative costs and expenses. Like, so I'm not going into the deeper details there, but your business is increasing by $30,240 every year. Okay. Now I like to look at things in decades and not in like years. So let's take a decade, 10 years. If you were to be doing this and you have the same strategy, that means that in 10 years you have a $302,400 per year residual revenue insurance business. 302 400 per year in residual revenue. That is very sellable. Now that means that there might come a time where you're like, you know what, I'm looking to retire from my insurance practice. Like, I no longer want to run this anymore. I don't want to maintain a service to clients. Well, guess what, there may be somebody who wants to buy a $300,000 cash flowing business from you and be able to keep maintaining it from there and continuing to grow it, and you can cash out. They may pay you three times, four times, five times the multiple on your revenue that you're earning. So that's why that's important. Maybe it could become a retirement strategy for you. Maybe it's something where you don't want to get new clients anymore. You just want to maintain the clients that you have and continue to have cash flow coming in. It could mean maybe this is something you want to pass down to your children. Either way, the only way to do that is by you owning your book of business. And if you don't own your book of business, somebody else owns your book of business. Trust and believe that. And if they say that they don't, it's not true. So, what you want to do is make sure that you're asking the proper questions around, hey, how do I earn residuals? And if they say you don't earn residuals, then ask who earns the residuals, because every life insurance company pays out residuals of some sort. And if it's not being paid to you, if it's not being paid to your upline, then it might be getting paid to the IMO, but somebody's earning residuals from this. Okay, and you want to verify how you can earn your residuals. And if not, find the insurance carrier, find the IMO, or find the agency that will pay out those residuals, because it's better to have it's better to get paid less upfront in commission and have higher residuals on the back end. And I know what you're saying. Like, Don, like, why would I short my upfront cash? Because you're thinking of this in decades. It's better for you to be able to make sure that you're sitting on a ton of cash flow in the background. that's building up in the back, residual income. Take all the biggest businesses that you can think of. I'll take T-Mobile as an example again. They have, I don't know, millions of customers who were paying them $150 per month that have been with them for 10 years. Think if you can build that same kind of business with your insurance practice, right? You could build the same thing. Obviously, assuming that you can make sure that you're maintaining, your chargeback rate so that you don't have a lot of clients falling off the books. If you can maintain that, have a reliable lead source, mitigate as much chargebacks as you can, you got and have residuals on the background, you got a great business. So just take that into consideration, take my experience of it, learn from that, do better from it, and now you're going to be seeing yourself 10 years from now like, wow, all my work that I did, I could pass this down to my children, I could sell this off, or I just have cash flow coming into my business. With that said, if you found this valuable, share this with another agent. And we have a free insurance agent chat. It's over 1,000 agents inside of this chat, this community. We talk about topics just like these. We talk about leads. We talk about finding the proper carriers. We talk about how to sell life insurance. We talk about advanced markets like IULs, annuities, etc. And if you want to be a part of a community like that where we share our wins and we learn and we continue to grow, I would definitely encourage you to click the link below, join the community. I would love to see you in there, and let's continue to grow a huge life insurance business. Peace.